What is up, guys? Welcome back to another episode of Lucid Daily. And today, there's not a ton of news, but there are a couple of things that we're going to talk about regarding the EV sector as a whole. We'll talk about a couple macroeconomic environment things that I have found in my research the last couple of days, and we'll go ahead and talk about a couple of pieces of news regarding Lucid. So let's go ahead and get started. Very first off, you do have Lucid. They were down 2.14%, so they actually did lag behind the EVs a little bit today. Tesla was up 0.7%, and again, the commas is just how they do it here in Europe. So keep that in mind that it's just normal percentages. Tesla was up 0.7%, and Rivian was actually up 2.5%. So I was thinking to myself, why were the EVs why did Lucid lag behind? Tesla didn't necessarily outperform super high as well today. Rivian did fairly well. Um, and it's odd because the S&P 500 had about a 1.8% jump today, which is fairly interesting considering that we had the EV sectors kind of lag behind a little bit. And I did a little bit of research, and the best thing that I can find is that the good news that has been coming out has been about the consumer. Now, when it comes to electric vehicles, like we've talked about, these electric car companies, these electric vehicle companies are mainly for higher income individuals at the moment. Eventually, they will trickle down to lower income individuals. So this good news about retail data that we've been having coming out does not necessarily impact these companies like it necessarily would the broader market, like the S&P 500, like consumer staples, financials, and things like that. So keep that in mind. Why EV and especially kind of tech a little bit is lagging slightly, not necessarily tech, but something that I'm noticing within the electric vehicle industry is that it's lagging behind a little bit more of the consumer discretionaries, the consumer staples, and even a little bit more of the technology. For example, Apple was up. Oh, whoops. For example, Apple was up 1.15%, so about the same as in between Tesla and Lucid. So it's keeping pace with the market. It was up on a green day. We did get some positive data. We'll talk about that in another video, but let me go ahead and give you guys some broad things that I've kind of been learning as I've been researching with more Q2 earnings coming out. One of the things that we should be expecting is more of a U-shaped recovery and not necessarily like a V-shaped recovery. And the V-shaped recovery, you can think COVID 2020, where you just saw that bounce and come back out. And that was because the Fed saved the day. But what we might want to start looking at, let me see if I can pull up a chart here really quick. What we may want to start looking at is more of a recovery. I can't get that chart up. More of a recovery coming out of the great financial crisis, where it wasn't necessarily a sharp V and bounce out. It was a slow, gradual. We had a crash, and we had to slowly come out of it more into a U. That's what we should start expecting when it comes to whatever we are in, whether it's a recession or not. And that kind of leads me to my next point. Up until the earnings, I was convinced, and I've been very vocal, and I'm still standing by the point that I'm fairly convinced that we are in a recession. And until about 2 days ago, I was about 80-20 on that. I've read two earnings calls from two different banks now, Morgan Stanley and JP Morgan Chase. And after reading them, they don't sound too concerned. Now, again, on earnings calls, they don't. It's obviously more of a sales pitch. They're going to put their best foot forward on those earnings calls. But I mean, Morgan Stanley's doing a $20 billion share buyback. And they said, like, look, we wouldn't do this if we weren't confident that we're going to be okay going forward. So Morgan Stanley has positioned themselves fairly well as a company. And they're like, look, we're positioning ourselves just to be a smart, good company going forward. Recession or not, we want to be at the best chances to survive. So I thought that was really interesting. I think that's just a good way we should think about the economy right now. Is did my expectations for a recession go down slightly? Yes, but once we get into the more individual companies outside of these broader based banks, then that will become more telling if we are really in a recession or not. So let's go ahead and keep going. First, you had Rivian announce a couple of days ago that they are actually going to be doing layoffs, and I think I saw the number was 10%. I could be wrong on that. I was looking for the number, but I couldn't quite find it. In Tesla, we already know has been laying off 10% of salaried workers. However, they have been increasing internal. So my question is, why haven't we heard this from Lucid at all? I mean, we're seeing almost every company either freeze hiring or cutting jobs, and we have not heard a single thing from Lucid as to why they are not cutting, freezing or hiring, freezing or firing people, laying off people. So that's just something that I thought was really interesting. Actually, up until a couple of months ago, they were still super. They were still hiring. I was seeing a lot of advertisements for Lucid in Arizona that were still hiring, and I think that is still because they're building a factory and they need to get as many people going as possible. That they're still ramping up. So maybe Rivian's at a point now where they're efficient to the point that they don't need to have as many people, but Lucid's still getting to that point where they're still all hands on deck, as many hands as possible. So that's something to think about. I wouldn't be surprised if we hear in Q3 that they're starting to cut jobs, just because that's what you actually, my friend actually from Tesla, she explained this to me. She says when a company is starting to ramp up, they hire as many people as possible at super competitive rates, like paying a ton more than, like, for example, Tesla. She's like, look, we had Lucid come actually try to poach a lot of our workers, and they did, and they were offering these people ridiculous hourly rates. However, like, what happens is usually after they get up to ramp, then they start to cut jobs. So I would not be surprised if we saw that in Q3. I don't necessarily think that's anything to worry about right now. Obviously, you hate to see people lose their jobs, but as these companies position themselves to go either through a recession or just to trim the fat off of a company, it's just something to consider. So we also did have a flyover from Bear's workshop today on the 15th. It is almost the 16th here in Germany, but it'll be the 15th for you guys for a while. So here is July 11th, as you can see here, and there's really no point in counting the cars. I mean, doing this was just kind of, it's just kind of good to see. You can see they're getting more and more of these cars out here, ready for delivery. I still don't know why they're having such difficult times, like getting all these cars just gone. Like, why don't we have more car haulers? Like, we have one, two, three, four, five, 6 lanes for call haulers. Like, why are these cars just sitting here? So obviously, there's logistical things that I don't understand. Maybe it's just part of the plan. Maybe they're waiting for a couple more parts. I don't know. But I would imagine that that's what this tent is for the final fit and finished products. But they're still moving cars, which is great. We don't know how many of these cars. Again, there's really no sense in counting the cars at this point. We kind of just have to wait for earnings. I know when they were first producing cars, it was like, oh, like, we can count the cars and see how many they're going to make. Yesterday, we saw a number around 2,000, which some people will say that that's super bullish if they're at 2,000. But for me, like, if I'm holding them to a 12,000 car standard by the end of the year, 2,000, like, we got to keep going. But we'll be able to hopefully take whatever cars they produce, and we'll be able to extrapolate that number, or even make it a compound that number just slightly to see where they'll be at by the end of the year, which we really hope will be an opportunity for them. Next, you did have Jazzy Love Lucid on Twitter today. She attached an article that I thought was interesting. Mercedes' stake in Aston Martin now comes second to that of the Saudi Arabian Public Investing Fund, which acquired 16.7% share of Aston Martin in 2019. I actually did not know the PIF owned 16% of Aston Martin. So that's something interesting to watch, to see the PIF acquire more and more. I don't know if Aston Martin, if like they're helping Aston Martin like as their whole company, or if they're helping them with an EV sector. Maybe that's something we could look a little bit more into. But I do think it's interesting how involved the Saudi Arabian PIF is becoming involved in just like trying to get their foot in the door in the auto manufacturing space with EVs, as well as the high-end vehicles like the Aston Martin. So these are all just things that I think are super fascinating. If you guys have not yet, consider subscribing for daily Lucid content. Now that I have settled in where I'm traveling a little bit, we can get these videos back out daily. I appreciate all support, and like always, see you next time. Thanks for watching.